Okay guys, welcome back. I've got another video here in the basic series for Algo Studio Pro. Today we're going to talk about bar types and exit conditions. So first, let's talk about bar types. Now you'll note if you've been working through this series that the majority, if not all of the videos have been done with range bars. And anything with the ES, I've been using a 10 range. Right now there's no particular magic to the 10 range. It just happens to be a good kind of a compromise between risk and reward, but more importantly is the reason we're using range bars. And you would find this would be consistent with other vendors in this space, whether they're on Ninja or other platforms. It's ultimately tied to how when we're designing the algorithm, how we define the entries and exits. So for an entry, as it sits within Algo Studio Pro, we can only enter at the close of the bar. Now that is definitive in terms of affecting the choices that we're making with regards to bar type. So I'm going to here you see two short signals here. If I'm working with a time-based candle, that candle could be that big or bigger before the entry, before the close. But I've met the conditions up here. So the advantage of the range bar is that it's not going to get too far away from the entry before I've got the bar closed to be able to accommodate the entry of the trade. And it would be very similar with if I was working with a 2,000 or a 3,000 tick chart. That candle can have some range to it, so we're not entering until the close of the candle. That could be too late to give us a good result. So the advantage of the in this case a 10 range is with the entry fires, and then the market doesn't get too far away from. I mean, it can only get 10 ticks away from us per the entry before the algo is going to enter the market, or if you're designing where there's going to relay the entry condition was met, right, if you're back testing. So that's why you see us using range bars as opposed to what, the last 4 or 5 years, everything I've posted here has been either time or tick based. Oh, I suppose we had some Renko in there as well. But range bars here, I would encourage you to consider, if you're not already doing it, I would encourage you to put that into your mix for that very reason. It's just going to be better entries, better trade conditions. And this would be true both entry and exit, which we'll get to in the second half of this video. So with that now established as to why we're using range bars, and again, my strong encouragement to you, to whether you're testing or whether you've made the investment, to at the very least include range bars in your design testing. 10, again, as I said, is kind of a nice compromise between risk and reward and being too late or too early into the trade. Now, let's get to what I have on the chart here. So this is well, you've seen me post this type of thing before. So effectively, it's again high-low, but I've included the second EMA. So let me bring up the chart here. Actually, hang on. So just so you can see what's on the chart. So our toolbar, right? Always, I'm going to have that price line, initial balance, always. If you don't have ours, you got to have somebody's or draw them yourself, right? Any day trader, you simply have to know where those are. Today being a good example of that. Initial balance, I have the Gann high-low, which is set to a 9 EMA, and then I have an actual 9 EMA, right? So you can see that little channel, if you will. It's kind of a modified SSL. And then I have the devil's edge below, right? Default setting. So nothing crazy, nothing magical here, nothing out of the ordinary to accommodate great results in the video. That's not the point. It's just to demonstrate. Okay, so we have that. Now, with regard to how I'm how I'm designing, I should say it that way, how I'm designing the code for this algo. All right, couldn't be any simpler. Oh, let's see. Before I do that, let me get the crosshairs and the data box up. This, whenever you're putting an algo together, anything that has trigger conditions, right? This will be very useful to you. So you'll note here, you can see these two arrows here. I've got two sell signals here. Well, they're firing for two different reasons. The first one is the switch of the Gann high-low from bull to bear, right? Over in this case from blue to that magenta. So that's firing that condition here. So if you look over here onto the Gann high-low, that's firing a short signal, and let me rephrase that. Because it's now underneath, right? We've got a bearish signal. The trend is considered negative. So you see trend -1. Trend here as we go -1. So that's a signal. That's a parameter I can use in the algo. Now here on the next candle, I've got the devil's edge firing, the move outside of the Bollinger Bands that surround the MACD. So I've got two signals here side by side. Now, note here when I go to the devil's edge, if you look down here under devil's edge, I also have signals. So if I put the candle there, you see squeeze short, you see it on the bottom, squeeze short is -1. And that's how you design in the algo. You're just going to use that signal for either one of those, right, to create that short. So with that said, now let me bring this back here. Let me get rid of that because I know that is annoying. Okay, so what you can see here is, so for the Gann high low, the first question is, okay, is the trend one is an uptrend, -1's a downtrend. So what is the current? Let me go here. So you see here the 9 EMA, the trend is what I'm working with there is the trend. I want it to equal 1, right? So I've gone equals, type is fixed, character is 1. So here would be a 1 because it's now uptrend. So I want that 1. If downtrend, -1, right? It's drop dead simple. Okay, the other condition that I have in here is that I don't want it to enter during a squeeze. So essentially all I'm saying is here, let me show it to you this way. Here's the devil's edge. Devil's edge. So here you can see it. When the squeeze is active, it will create a 1. Saying squeeze. If it's a 0, no squeeze. So thus the same idea here. I've gone in. If the Gann high low is showing a squeeze, meaning it has a 1, don't trade. So I only want you to enter if that does not equal 1, and it would be exactly the same for short. Don't enter during a squeeze. Now the other variable here, which we've already talked about, is the devil's edge. So when I get this signal here, that's a 1. If I get this signal here, that's a -1, which you would see, right, just through the Gann high low box. Let's see if I can do it on the fly. So here you would see this. So signal short is -1. Here signal short is +1. So I get a long and a short signal. Right? It's super simple. But if you've not done this kind of design before, it can be a little weird. What? Right? Data box will be your best friend. Okay, so let's bring this back. So you can see that's all I've done. If it flips positive, take the trade unless it's a squeeze. Same thing with the Gann high low. If it pops here, take the trade unless it's a squeeze. That's all I've done. Now I could get more complex with that if needed, if I chose to. But one thing you'll note here is that rather than say I want all 3 of these to be present, what I've done is I've gone to an at least. So my choices are and, or, at least. And I'm just telling it at least 2 of these conditions must be present, which means it could enter during a squeeze. And you'll find there are times when you're going to look back at a trade and go, oh, too bad there was a squeeze there. That was a great looking trade. So I'm kind of allowing for that possibility here as long as these other 2 variables are active. Now, let me show you this, because this is when people first start designing algos with ASP or with any product like this. It's very common to see people go, okay, I got all my entry conditions here, so now I'm going to go over to the ATM. Let's set the stop, or maybe I'm going to run the optimizer, and let's see what kind of results we get. Well, let me just show this to you here. I've got this chart over here, and this is the point I'm trying to make. If you do not set, and let's get rid of these. If we do not set an exit condition, and we just let the ATM optimizer define the stop, well, this is the kind of result you can end up with. Now, you might look here and go, God, look, oh my God, look at that. It's a $3,800 winner. Well, yes, but that's this. It's just not realistic. So let me give you a better example here. If after that $3,800 winner, if it sold it here and goes all the way down here, would you want it to stay short and then ultimately get stopped out here for this massive loser after being short here? I'm going to assume not, right? And the same thing. Okay, yes, it's a big winner. Oh, that would have been your stop loss here. Are you going to? There's a big winner here, but it's going to distort, right? I mean, some of these are going across multiple days, meaning there's going to be no trades until it gets out here. Now, granted, it's a big winner, but that can be really deceptive. I would encourage you to try to avoid that. You don't want to see that. in your results. And of course, you always want to go back and look through the trades. And then I would go over to the reports, as I always do, and look, okay, what times of day? So it's going to trade for, it's got a half an hour here, half an hour here. This is not what you want to see. You want to see very consistent green bars, and you don't want to see it spread out over 24 hours like that. Let me rephrase that. We would strongly encourage you to reconsider an algo that's giving you that kind of result. And while you can look at this and go, let me get the results up. You can look at this and go, God, they're fantastic. 11,006. I've only got 2 weeks of data up here. Again, it's just not realistic. You don't want that kind of a thing. I mean, the size of the drawdown here is 1286. It's just not a realistic algorithm. You wouldn't want to bring that up and see this thing having taken this short, been up. I mean, how much? It's kind of crazy. You're up $2,000, and that's all going to get big. You're going to let that run away from you and get stopped out here. My guess is that's probably not the kind of algo you would want. Here's a long, right? You're going to stay short all the way through that? Right? Probably not. That's really not what you're after. So having made that point, of course, always don't get seduced by this number. It's just not realistic, right? It's just not, right? So it's optimized. It's not the result you're looking for. So let me show you how to solve for that. And this would be regardless of how you're approaching the market with regards to the algo that you're designing. You want to be mindful of the exit and then the reality of what do the trades look like. So let me go back over here where I have designed this algo. So which one of the here now I forget which one I've got over here. So okay, so that's the other one. Now let me bring this one up here as I itch on my nose, sorry. Okay, so here, let's go to the algo and let's bring this up. Okay, so the exact same algo on the entries, exact same. Now, the only difference, I've created an exit condition. And this is commonly done amongst this type of an algo, and something that I would encourage you to try, rather than some specific target or some. I mean, well, you can do and or you do whatever you want. But I would encourage you to consider this as one of the choices is only available on exit, not entry, and that is exit after a number of bars is open, right? In this case, I've told it 9. Now you'll remember I'm using a 9-period EMA. Now, 9 is a number in the market that has some, let's just call it popularity. Whether we're talking about DeMark and his sequential, or just the 9-period EMA being very popular amongst day traders, it's a good number, right? So we know if the market's going to go immediately against us, the worst case, well, I mean that'd be a $900 loser. That may not be within our risk tolerance, but we know it's not going to be any worse than that. Right, you would say it that way, but it's the same thing with winners. So when I having created that, now you can test here, right? I'm using 9, but you could often a place to start is with 5 candles, and then you must say, oh, let's try 7. Oh, let's run 9, and see how that looks. Right now we go through the trades. Let me put the trades back up here. Much more palatable, right? Here's what we want. We want to be, where's an arrow? We want to be in the trade and then out of the trade, right? That's the move we're after. Particularly for a day trader, right? It's fun to look, say, oh, what if I caught the turn here and I got it all the way? Okay, yeah, that happens, but not often, right? So you can see here, I'm getting the entry, but it's straight up 9 candles. I got a little pullback here, but that's the kind of trading that we're looking for with our result. Now you say, okay, well, how does it do? That's on 2 weeks of data. Granted, I ran the optimizer before I teed this up, just so you could see that. Now, is that more realistic? Well, let's look at the reporting. Let me bring this over here. Okay, certainly much better. Now it's spread to the first half of the day, and in the afternoon. This is 1:30. It goes quiet. This is after the close. a little bit of trading in the overnight, but all of this, these nice big green candles, with 10 o'clock being your best time of day for this algo, right? Based on the last 2 weeks of data. Now, 2 weeks is not enough to get in and start, going at it live. I'm just using that because it makes the time of the optimizer running, it reduces that time. So rather than try and run it on 30 days, here I just went with 14. So I show you this. Well, that's a nice looking equity curve for any algo. Period, right? The drawdowns are not dramatic. Here, average win, average lose, right? That's one of the first things I look for. Win rate, very nice, 56. Profit factor, 1.62. This is total. This is 177 trades in 2 weeks. That's a lot, right? Minimum for any algo to have any degree of robustness or confidence, you want a minimum of 100 trades. Well, I got 177 in 2 weeks. So this thing trades quite a bit. Biggest loser, biggest winner. Again, things that I look for. I like to see about 2 to 1. We're not quite here, but good numbers here. Biggest losing streak, it's not ideal, right? So this is an algo that might need a little fine tuning. It might be that you say, okay, well, that's a little much for me at 978, right? That's likely one that just went straight against us. So I might tweak that and go, hey, I'm going to take that down to 5. Well, here, let's just out of curiosity, see if I can do this on the fly and see how that affects it. It's not dramatic. Brought the largest loser down a bit. Put the biggest winner, biggest loser. Now I've got that just about that 2 to 1. Oh, a little more. I've got a little more than 2 to 1. Not a dramatic change here. It didn't dramatically alter it. It just improved that win-loss, the size of the biggest winner or the losing streak to winning streak came down a bit, right? So maybe you look at that and say, okay, that's good, right? And maybe we put another filter on it to try and reduce that, because ultimately we come back here, we go to Monte Carlo, we want to be sure that we're not creating an algo that's got a very high degree. Let's change this to anything like this. I would suggest 25,000 would be appropriate if you're going to run this thing in the background, unless you're using micros. Well, here now with this, it's if I say, okay, give me slippage on 50% of an additional tick of slippage. I already have a tick of slippage in. Now give me an additional tick of slippage. Is it dramatically worse? Is my risk of ruin gone up? No. No, right? But that's something to check, right? Particularly if you're trading with a 5 or a 10K count. Let's be careful about going into full size, right? That might probably be better. Well, not probably. It will definitely be better for you to be starting with micros. And many people, even with a 25, 50, 100K account, may want to start running something like this in micros just to get comfortable with it, right? If you're going to let this thing run 24/5, well, you got to be comfortable letting it run. Assuming you're choosing to do that. You don't have to do that. But if you want to see that kind of result, at the very least, you're on the right track. All right, you've got a good start. Okay, what can we do to reduce some of that drawdown? Well, maybe nothing, but that's something where you would go back and look what was going on in that section between trades. What is that? Probably 60 and 80. What was going on there? Was that just a flat, choppy day? What was the issue? One thing you will notice here, if I go ahead and close this, that's common with, again, high-low. Because we have those sensitive conditions here, very often as it flips, you'll get a sell and a buy. Now, the sell is going, here you see a sell and a buy immediately reverse. And that's, in many respects, it's showcasing you how there's often a little bit of battle between bulls and bears at the 9 EMA, right? So it's very, very commonly used for day traders. So you see it again here. All right, now, what we want to try and avoid is, if we can, is there any way around that? Well, again, that might be some additional filtering, some other ways we could approach that, but now we're kind of getting into the algo design, which is really not my purpose here. I wanted to just truly get you focused on the advantage of working with range bars here rather than timer tick in your back testing and ultimately your trading. And then also the importance of an exit condition. See, note here, you can see the target and the stop. You can see all of that. You'll also notice this is all during a squeeze, right? So we don't want entries happening here, yet it happens, right? Why is it happening? Well, here I got a little section here, right here, where I have no squeeze, where that's happening. And then I go into all of this squeeze, nothing happening here. But you'll recall in the conditions, 2 out of 3. So it could fire during a squeeze if the other 2 conditions were present. Get you out of there. Often you see the chop at the 9. All right, now. Now this is filtering out the times of day that here, let me do it this way. Let me take those off and put the trades on, entry signals, and let me go to here. We'll just go to RTH, right? And then let's get the entry signals on here. So now you see it just from the opening here, right throughout the course of the day. Do you want to take all of those? One other thing to note here, I have this set in the logic to be running one shot. So you're not seeing, if I change this to continuous, this can be a little overwhelming, right? So now it's like you've got a colored background. Okay, right now if you're running the strategy, and you have it set on continuous, it's going to take every one of those trades. You may or may not want that. It's up to the individual. I'm just demonstrating you have that capability, because as long as the conditions are present here, once it hits its target, and the conditions are still present, it's going to enter the next trade, which is all fine and well until we get to the very top when it takes that last long, and then loser. All right, so you have to decide whether you want to do that. I think for our purposes here, where I'm demonstrating, it's better to have this. If I bring this over here, move it back to one shot, so that we aren't just overwhelmed with trades, right? But again, you'll note here's the stop on that entry. Here's the target. Doesn't get there. And often you'll find that it won't get to the ATM's target. Let's go back over here. The ATM's target, well, my initial stop is an ATR of 5.7 to 1. Initial target is 51 ticks. Now, you might look at that and go, God, that's more than I want. Well, you could start refining that. Again, as we did, it could be number of bars. So 1, 2, 3, 4, 5, right? You'll recall, right? So five bars, 5 candles here, 5 10 range candles out. 5 out. 5 all going your direction, but you're out. 5 going your direction, you're out. But we don't get those runaway trades that are, you're selling it here and getting out, 3 days later. We don't want that. It's not what you're after here. What we want is here's a great example, right? So it's a long right here, and then we get the confirmation long. We get the second long here, so you got long, but it's 1, 2, 3, 4. Whoops, 1, 2, 3, 4, 5, and out. So rarely is it going to make its target, the ATM target. Now you can open that up. You could take and say, oh, okay, I want 12 bars. I mean, those are all things you have to test, right? In your logic when you go back to your exit signal. Here we've got 5. We can go to 12. Now you're opening it up to a lot more risk if something's going against you before hitting that stop. Just out of curiosity, my guess is that's not going to look so good, right? So now that has to be optimized. But now just doing that, changing it to 12, look at the difference. Exits are important. Right now, I could probably improve that running the ATM, but that's not my purpose here. My purpose here is just to be sure that you're aware of the value. Oh, let's go back to where we started, which was 9. The value of having that exit condition, and it could be, in this case here, I'm using number of bars. It could be a reversal. If we go from a short to a long, that gets you out. Well, then remember here where we have often around the 9, you'll see, be on either side of it, as that's a kind of a battleground. You can get long, short, long, short, long, short as you do there. Careful of that, right? The kind of thing you might want to try and filter out. Right, but at least if I go back to where we started, at least you're on the right track. Back to our ATM, right? So here I've changed it just to the RTH hours, right? Well, okay. We run that optimization again to see if I can improve this. And hopefully that makes the point here. So you see now only trades during the RTH session. Okay, so nothing in the overnight, right? Now you look here and you go, oh, cool, I kind of would have liked to have been there for that. Decisions you got to make. Okay, that'll wrap it up here. I hope that's helpful to you. Just some new ideas, or maybe things you're wrestling with or haven't thought of, or perhaps you're already well underway working with this. Just want to give you some new things to think about and some new ways to experiment with it. Okay, guys, with that, I'll wrap it. Have a good one. We'll see you on the next video.